Good day, everyone, and welcome to the Opening the Door to Your Future Home webinar. This webinar has been organized for you by us, the United Nations Federal Credit Union, and it is here to share, or we are here to share with you some best practices and insights to help you navigate your home buying process with confidence. My name is Sylvia Baez, and I will be your host and moderator for today's session. I am the Director of Lending Operations here at UNFCU. I have over 25 years of experience in the industry, and what a journey it has been and rewarding to see folks just like yourself realize their home ownership dreams. A little bit about the United Nations Federal Credit Union you see on the next slide, or UNFCU as we know it. We have been providing global banking for global citizens since 1947. And today we are proud to say that we serve more than 240,000 members and families of the UN community across 200 nations and territories as their trusted financial cooperative. And one of the ways that we serve is through our dedicated mortgage team. On the next slide here, when buying or refinancing a home in the US, you can count on our mortgage team for expert guidance. We also help qualified members, including those with G4 visas and those with little to no US credit history here in the US, secure a US mortgage. Let's go ahead and introduce our guest speakers for today's session. We have Chip Allen, who is our very own AVP of Branch Mortgage Production at UNFCU. He comes with over 30 years of mortgage experience in the industry. Chip oversees the inside sales mortgage team at UNFCU in New York. He has assisted hundreds of members throughout the home buying process, including first homes, second homes, investment properties, and even refinances, all while helping others tap into the equity in those homes. Chip has earned the UNFCU's President's Award in 2009 for his outstanding service. We also have today Chris Gitonakis, real estate attorney at the Gitonakis and Corona law firm. Chris is an attorney licensed to practice in the state of New York, and throughout his career, his focus has been on real estate transactions throughout the five boroughs, Westchester, and even Long Island. He has worked for international and domestic individuals, private and national lenders, and corporations. Lisa James, real estate salesperson at the Corcoran Group. She is a seasoned real estate expert and award-winning co-leader of the Morris team at the Corcoran Group. With over 30 years of experience in New York real estate, she has, with her team, built a strong reputation for client management, guiding countless buyers through the home buying process, from townhouses to condos and even co-ops. They have helped clients secure their first homes and investment properties. And we have our very own Catherine Gano Martinez. She is the Premier Service Supervisor here at UNFCU. She has dedicated nearly 18 years of service, and throughout her tenure, she has held roles from teller to member service representative, gaining deep expertise in member engagement and financial services. In her current role, she leads the Premier Services team, focusing on maintaining strong relationships and serving as a key point of contact for our members with UNFCU mortgages. Now, as far as our agenda, you see here, we will kick off with building your home buying team, and that will be presented by Chip, and he will follow with the home buying process for the second session. Catherine will come in to share the benefits of being a member at UNFCU, and we will wrap up with an FAQ panel with our home buying experts, which includes Chip. We'll bring in Lisa and Chris, and they will be here to answer your questions. And before we begin, just a little housekeeping. All participants are muted throughout the webinar to ensure a smooth experience, but you may submit your questions via the QA feature on your screen anytime throughout the webinar. And the speakers will address those questions at the end of each presentation, as well as the FAQ panel. If for any reason your question, due to timing, is not answered while the webinar is in progress, we will ensure that a mortgage rep reaches out to you directly to discuss those inquiries. Please note, this session is being recorded and will be available on demand via our website soon after the event's conclusion. There we go. Hello, Chip, and welcome. Thank you for joining us today. We are all anticipating the Building Your Home Buying Team is our first session. The floor is yours.
Thanks so much, Sylvia. Again, my name is Chip Allen. I've got many years in the mortgage business, over 23 years here at UNFCU. So it's been a wonderful career and opportunity for me to serve our UN staff members and all of our other members too. Thank you also for all of our attendees for joining us today. We appreciate your time. I hope that you'll find today's event to be useful and educational, and maybe even a little bit inspirational as you move forward with this journey of buying a home here in the United States. So we've got a lot to cover. We're going to start off by talking about your home buying team. First off, we'll talk about my colleagues here at UNFCU, the members of your team who work at the credit union. We'll also review some external key team players, people who work outside of UNFCU. And when we've finished talking about all of these various people who are going to become part of your life, at least temporarily, we're going to do a high-level overview of the home buying process, really from like the very beginning, when you make an offer on a home, to the point of closing. So you have a good expectation of all the steps that are going to take place, and ultimately, how long is all of this going to take? But we'll move forward first with your mortgage team. If we go to the next slide, please. Okay, the first person that you're going to meet with when you begin this process is your mortgage representative. And a mortgage representative could also be called a loan officer. Here at the credit union, we use the term mortgage representative. But when you first meet with your mortgage representative, they're going to ask you, what is it that you're looking to do? Do you want to buy a house in the suburbs? Do you want to buy an apartment in the city, a condo in Florida on the beach? Based on that information, your mortgage rep is going to move forward with even more questions and ask you about your income and your assets, what you think your credit profile would be like, what's your time frame for moving forward with the purchase. Really, all of these questions are part of what would be called a mortgage pre-qualification. A pre-qualification is a very preliminary step. It's just based on a conversation, but based on that information, your mortgage representative is going to be able to craft a very well-rounded estimate. Now, it is an estimate of what you're going to qualify for, and what type of scenario is going to work best for you. While it is an estimate, I think you'll be surprised at how accurate that pre-qualification will be or can be. And it's important to have that as a starting point. Listen, we would all love to buy a multi-million-dollar apartment on Park Avenue. I mean, why not? But that's really not in the cards for most of us. So to have a realistic, rather detailed pre-qualification to begin this process, that's what your mortgage representative is going to do for you from the outset. The mortgage rep is also going to be your point person throughout the entire course of the loan. So this is the person that you'll work with most closely. They'll be with you from the very beginning until the end. Go to the next slide. I'm already going to take a little bit of a detour here because we've sort of talked about income and assets and so forth. I want to give you an idea of the types of documents that are going to be requested from you as part of the mortgage application process. We will need to document your income and your assets. Even if you bank with the UNFCU, we don't necessarily have access to all of these specific documents. So for income, that would be pay statements. If you work at the UN, a personnel action form. If you're outside the UN, that would be W-2s. If you're a self-employed person, we would ask for tax returns. We would want to document your assets. We need to make sure that you have the funds needed to complete this transaction. So we would gather bank statements, investment account statements, and so forth. We'll need your social security number here in the US to obtain your credit report. If you don't have a social security number, don't worry. Or let's say you have a rather limited credit profile just because you haven't had a lot of credit history in the United States. All of that is okay. We're totally fine with that. The credit union is very well versed in navigating through non-traditional credit for our members who do not have a traditional or standard US credit profile. We'll need to ask some questions about where you've lived and how you've lived. I mean, have you owned or rented, et cetera, for the past few years? Of course, we'll get information about the property that you're buying. And ultimately, we will get the contract of sale. Now, later in this same presentation, we're going to go into a deeper dive on the contract of sale. So you're going to have a pretty good understanding of what will be involved with that important document. So now if we can go on to our next slide, we'll get back to our team members. The next person that you will work with, and this is another person that you work with closely, is your mortgage processor. So the mortgage processor and the mortgage representative really act as sort of a mini team with you as a third partner in that mini team. I mentioned all of these various documents that are going to be required for your mortgage file. The task of the mortgage processor is to gather and organize all of those documents, make sure that they're correct, they're what we need, have them reviewed. The processor is going to also order a variety of reports and documents from outside the credit union, meaning an appraisal report. We're going to talk about that important portion of this process. A credit report, a title report. They're basically the organizer of the entire file. And once they have gathered everything, working with you and with these outside vendors to have a complete file, the mortgage processor is going to submit that file for review. Ultimately, they will work with you. Also, they will provide you with, say, a commitment letter. That's your approval letter, and they'll help prep you for the closing transaction. We work very closely with your processor, and again, that's a mini team that will be working throughout the whole process from start to finish. Once the mortgage processor has gathered all the documents and has a complete file, they're going to submit that application file to a mortgage underwriter. And the term underwriter is always a source of mystery for a lot of members. Like, who is this person? Um, and because you don't necessarily, unlike your mortgage rep, of course, and your mortgage processor, you won't really have any direct contact with your mortgage underwriter, but they play a very, very important role in this process. The mortgage underwriter is going to basically receive a complete mortgage file or application file and do a risk analysis of that file, working with our own UNFCU guidelines and any applicable federal or state regulations that we need to adhere to. They are going to review all of the aspects of that file. And ultimately, it is the underwriter who approves or declines the file. So they have a big task, and the credit union and all lenders are very reliant on their underwriting team to be knowledgeable and also be able to work outside the box occasionally, if that's called upon. Anyway, ultimately, the underwriter is going to be the one to approve your file. And after your file has been approved, then we get to the fun part. Your file would then move along to my colleagues in the mortgage closing department. So our closing department or our closing team, they're going to coordinate all of the closing aspects of this loan. They're going to generate, review all of the legal documents, the loan documents. They're going to coordinate with all the various parties for that specific closing date that's going to take place. They will arrange for all of the monies to change hands so that you will ultimately, at the end of the day, walk away with the keys to your new home. So those are your UNFCU mortgage team members, your mortgage rep, your mortgage processor, the underwriter, and the closing team. Now let's move on to our external, very important team members. These are our other key players. First and foremost, your real estate agent. Probably 99.9% of home buying begins with online searches. And that makes sense. There is a massive amount of information available to all of us as consumers online, and you should take advantage of it. It can be a little addictive or mesmerizing. And you'll know what I mean once you've spent 3 hours going down the rabbit hole of Zillow searches. And that's great. You can learn a lot about a community where you might like to purchase, about what's going on in that local real estate market. And it's a great place to start and very wise thing to do. But when you are getting down to the brass tacks, you are actually deciding on a home or homes that you really like, that you'd like to make an offer on, that you want to actually purchase. It is really very, very important that you have the assistance and the guidance of a professional real estate agent. So while you can learn plenty of information online, there is still a massive amount of different information that your real estate agent can provide to you that you'll never find online. Information, about the specific house that you may not find online, about the community, development plans. Is there a new shopping mall being built down the street, or is there a new highway being put in? Information about schools, other community aspects. All of that information is invaluable, and that comes from working with or having the resources of a professional real estate agent. They're also the ones with, professional experience and the strategy to help you navigate through the offer process. It's a rather competitive real estate market in most of the United States now. So you need the assistance and the guidance of a real estate agent who can give you some direction on the strategies that will work best for you. Fortunately, later on in our presentation, I believe Sylvia already mentioned, you're going to have the opportunity to ask some questions to our good friend Lisa James, who's an excellent real estate agent here in New York. We really appreciate her participation. Next up will be a real estate attorney. So when you are buying a home, you hire a real estate attorney to represent you. And what you're hiring that attorney to do is actually multiple things. First off, the attorney is going to represent you during the negotiations of the contract of sale. And we're going to talk about that in just a few minutes, that contract. But that's at the very beginning. Once you're in contract, your attorney is going to conduct a title search on the property. Basically, they're doing a review of all of the sort of legal history of this home to make sure that there's no liens or judgments or any other type of issue that could hinder or hamper your purchase or future ownership of the property. And finally, your real estate attorney is going to physically attend the closing with you, sit right next to you while you're signing off on all of these documents and review them as you go to make sure that everything everything is right, that everything is ultimately to your advantage also. We've also got my old friend and longtime professional colleague, Chris Kitanakis. who will join us for our Q&A session later. So thanks very much to Chris also for joining us. Okay, I mentioned very briefly an appraisal report. So what is that? When you're buying a home and you're taking out a mortgage on the property, you are pledging your home as collateral for the loan. That's how mortgage loans work. So as a lender, we need to make sure of what the property value is, that the property is worth what we're lending to you and what you're paying for it. So we hire a professional appraiser to compile an appraisal report. It's basically a report that determines the fair market value of the property. So the appraiser will visit the property, take pictures, do measurements, do a whole analysis of the actual specific property and the grounds around it, if applicable. They'll also do a comparative analysis with other recently sold similar homes. These are called comparable sales. And merging all of that information together, the specifics of this home plus other recent comparable sales, the appraiser is going to determine the market value or the fair market value. And that rather lengthy and somewhat complex report is going to be the basis for our approval of the loan and approving the property as collateral for the loan. So the appraisal report is very important. Everyone's always a little bit on pins and needles waiting for the report to be completed. But once it's done, you'll be happy to see it, and it's a very important part of this process. Somewhat similar to an appraisal, but yet quite different, is a home inspection. So that appraisal that was done, it's really just to determine the market value. And I say just because it's a rather complex process, but that's what the appraisal report is for. But the appraiser is not really studying the structural issues with this home. So especially if you're buying an existing home, not a new construction property, an existing home, it's important that you have the home inspected. So you would hire a home inspector to visit the property. You're frequently invited to go along so you can see what's taking place. Um, the inspector is there to review all of the mechanicals of this property. So they're going to check out the roof, the foundation, the wiring, the electrical, the heating, the plumbing, to make sure that everything is in good shape. Hopefully everything's in great shape and there's no issues. However, let's say the inspector does come up with some issues that could be problematic. That may give you an opportunity as the buyer to go back and renegotiate some things with the seller. You may ask that the seller either repair some items before the closing takes place, or you may ask that they give you a credit so that you can make the repairs if they're needed. Also, you could end up with a situation, unfortunate, but could happen, where the inspector finds out that there are massive problems with his home. Cracked foundation that's going to cost $100,000 to repair, or whatever it may be, underground oil tanks that are leaking. Ultimately, there could be problems so great that you decide that you don't want to buy this home. That's unfortunate, of course, but it's better to find out now rather than later. So that's, spells out the importance of having the home inspection completed. Um, your real estate agent would, of course, be able to help you find a local home inspector that they've probably done work with in the past. There's going to be two different types of insurance that are going to be necessary. So first, you'll work with a title insurance agent. So I mentioned that your attorney is going to review sort of the legal background or history on this property. And they're going to do that by way of requesting a title report, which comes from a title insurance company. It's all of the background information on a home. And your attorney's again going to review it to make sure that there's nothing currently outstanding that would be problematic with your ownership or your purchase or the transfer of the deed for you. Um, Ultimately, once the title report has been reviewed, the title insurance company is going to issue what's called title insurance, and you pay for it once when you purchase the property. It is insurance that protects you as the owner and us as your lender against any types of future legal claims against the property. Title insurance doesn't come into play all that frequently, but it is a requirement. It is necessary, and it's important for you and us to have that type of coverage. And your attorney would take care of the purchase of that title insurance. Title insurance rates are set by each individual state, um, so it's fairly a transparent process. Finally, you will be working with an insurance agent or a homeowner's insurance agent. So, since your home is acting as collateral for our mortgage loan, we want to make sure that if the home is damaged or destroyed, that there is insurance in place to rebuild the property or to restore or to repair the property. As a homeowner, of course, you want to have that same type of homeowner's insurance. You need it too to protect yourself and your investment and the place where you live. Typically, people think of home insurance for a fire or a tree falling on a house, and those maybe are the most common. But there are all types of insurance coverages that may be needed. If we go to the next slide, we'll talk a little bit about that. Depending on where you buy, there could be added or supplemental insurance that's required, not just recommended, but required. Let's say you buy in Florida, you may need to have hurricane or tropical storm coverage. If you buy out west, you may need to have wildfire insurance. Anywhere in the United States, you may need flood insurance. Um, so your insurance agent is going to, of course, think about the specifics of where you're buying and what you're buying, and use some federal mapping information to determine what types of coverages either are recommended or required. So these are all of the different team players working with you, starting with your mortgage rep and all of my colleagues here at UNFCU, to these also very, very important external team players. Now that we've talked about all of these team players, um, let's talk about this home buying process. Go to the next slide. Okay, well, first, you're assembling your team. You've met with your mortgage representative. You've been pre-qualified for a loan. You know what's probably going to work well for you. You found a real estate agent that you like, and you have found a real estate attorney to represent you throughout the process. So you've been looking for a home. That could take a weekend. Hey, you might be lucky. Or it could take 6 months. That will be up to you and the search that you want to take on or conduct to find the home that you want to purchase. But ultimately, when you found the home that you want to buy, you will make an offer. So together with your real estate agent, you would make an offer to the seller. And there could be some negotiations back and forth, of course. Number one, on price. Some other issues could come into play, things like the closing timetable. Do people want to close sooner or later? Frequently, there are some negotiations or discussions about other terms, other items that would be included in the sale. I mean, that could be things like draperies or light fixtures or appliances. All of that's important, and ultimately, all of that will be spelled out in the contract of sale. So you've made your offer, you've negotiated back and forth, and you and the seller are in agreement. At that point, the seller's attorney, because the seller has an attorney representing them also, the seller's attorney is going to draft the contract of sale. So the contract of sale, which is also sometimes called a purchase agreement, is the legally binding document that says that you're going to buy this home and the seller is going to sell you this home under these agreed upon and contractual terms. So the seller's attorney drafts the contract. That goes to you and your attorney for review. Again, these negotiations may take an afternoon or they may take a week, but ultimately, the contract of sale will be hammered out and agreed upon. Now, at the time that you're executing the contract, as the buyer, you are going to be expected to make a contract deposit, which is sometimes also called an earnest money deposit. So the amount of deposit that you make, this good faith deposit, will depend on where you're buying. In some parts of the country, it's a comparatively small amount, $5,000, $10,000. That's still a lot of money, but when we talk about some other situations, it's comparatively low. So you're buying a $500,000 home in Florida, and you may be asked to make a $5,000 contract deposit. If you're buying in New York, especially in New York City within the 5 boroughs, you'll be expected to make a contract deposit equal to 10% of the purchase price. So on that same $500,000 purchase, you would be expected to make a deposit of $50,000. That money, you would write a check or wire transfer the funds to the seller's attorney. And that money would be held by the seller's attorney in their trust account until the time of closing and would ultimately be credited towards your total purchase price. There are contingencies in the contract of sale, a contract of sale that would allow for the refund of that money if the deal didn't work out. But that's something that's important to review with your attorney, which is another reason why you have a professional real estate attorney representing you to make sure that all of those protections are in the contract of sale that you are about to sign. So what happens next? You've signed the contract of sale. Great. Up until that point, not much would really be happening here at UNFCU. You probably would have been pre-approved. We're going to talk about pre-approvals in our next segment. But we're just sort of in a holding pattern. But as soon as you submit that contract of sale to us, you're going to forward it to your mortgage representative, everything is going to really begin to move. You submit the contract of sale to us, your processor will be in touch to perhaps update any documents that need to be brought current from you, any other things that may be outstanding. Again, that appraisal report is going to be requested. We know how important that one is. Your attorney is going to complete that title search, that legal background search on your property. The file goes back to that underwriting team, and your underwriters will issue that final loan approval, meaning that you're cleared to close. Everything is good. And ultimately, your file will go into closing. So that the closing is that day where all of the parties meet: buyer, seller, attorneys, real estate agents, title insurance agents. The monies all change hands. All of the various legal documents um, um, are signed and executed. The deed is transferred into your name. And ultimately, you walk away with the keys to the home. So how long does all of that take? Again, like so many different things that we've discussed so far and will continue to during these conversations, a lot of it will depend on where you are buying. So if you're buying in the Washington, D.C. area, or out west, California, Oregon, Washington State, parts of Florida, the expectation is the closing will take place in roughly 30 days. So it really moves quickly. Once you've signed the contract of sale, everything is ready to go, or everything begins to go very quickly. If you're buying in the northeastern United States, you're probably looking at more like 45 to 60 days. If you're buying in New York City, it could even be a bit longer. But generally, your closing would take place in 30 to 60 days. from the time of signing the contract of sale. So that's that sort of bird's eye overview of this whole process. Hopefully that helps you understand some of the steps that are going to take place, and what you can expect and who's going to be participating when. So I think that brings us to the end of this section of the presentation, and my good friend Sylvia is going to come back and we're going to answer some questions from you.
Thank you, Chip. I mean, that was exceptional in explaining each role of this process. It truly does set the expectations and really sets that stage to move forward with that confidence that we've been talking about. We do have some questions that came in. One of them being, in your explaining of each role, do I need to find all of these team members, attorney, appraisal, title? Who does that?
That is a great question. Um, of course, the team members from UNFCU, they come along with your application. So we come as a group. Ultimately, you have the opportunity to choose pretty much all of the external participants. Your real estate agent, your attorney. The title insurance agent would generally be found by the attorney. The credit union would select the appraiser. You would select your inspector, um, and you would choose your homeowner's insurance agent. That said, I would suggest that you speak to your mortgage representative, and perhaps get some referrals from us. We're happy to. We have many years of working with a lot of these same colleagues, real estate professionals, real estate agents, real estate attorneys. We're happy to connect you to people that we know and trust. You're certainly under no obligation to use our recommendations. If you have friends or family members who have a good recommendation, that'd be a great place to start. Ultimately, I would say find a really good real estate agent, and that real estate agent is going to bring all of these other parties in for you. They'll help direct you to find an insurance agent, a home inspector, an attorney. Um, your real estate agent is really a key player and a key partner in the whole process.
All right, excellent. Thank you. I mean, it definitely puts us at ease that you do have a backup in case we can't find our own. A member would like to know at what exact stage in the search, this buying process, will the appraisal or the appraiser do the appraisal? And at what stage in this process should the home inspection actually be done?
Okay, another great question. Let's touch on the appraisal first. So the appraisal is only done after the contract of sale is signed. Sometimes people question, well, why am I not getting this market value beforehand? Well, there's a lot of information in the contract of sale that's going to be built into the appraisal report. So the appraisal can't be completed until after you've signed the contract. However, one of the things that I mentioned, again, going back to the importance of having a good professional veteran real estate agent, your real estate agent is going to do a sort of similar comparative analysis for a home that you're interested in. It's not specifically an appraisal report, but your real estate agent can compare this home that you're looking at buying to many other recently sold properties or properties that are listed for sale, to give you the confidence of knowing what the current market value is for this home and what's the appropriate price to pay. For the inspection, again, it goes back to location. In most places, the inspection is actually done before the contract of sale is executed. Um, might as well go ahead and have that done beforehand. There are some states, New Jersey, for example, where you sign the contract of sale and then you're given a certain amount of time to have an inspection done. And if there's issues, then you have to go back to the table and work on renegotiating some of these issues or aspects of the contract of sale. So again, your real estate agent and your mortgage representative would really be able to give you good direction on when the home inspection would take place, and it's really sort of set by the municipality or even the state.
Gotcha. And Chip, you mentioned something about paying there. So one of our members wants to know who will pay for the services of the realtor, lawyer, appraiser, inspector, the whole list.
Okay. Ultimately, the vast majority of these services are going to be paid for by you. Um, Really, all of them, with a small caveat for real estate agents. And we'll probably even have Lisa maybe give a little bit more in-depth detail, because how real estate agents are paid has changed some over time in the recent past throughout the United States. But in general, all of these other services are going to be paid for by you. I mentioned at the beginning, when you're first meeting with a mortgage representative and you're talking about a pre-qualification for a specific loan amount and et cetera. Another thing that they're going to do is spend quite a bit of time with you talking about your budget. And we're going to talk about closing fees in our next segment of this event, in our next presentation. But that's information that's going to be available to you from day one. What types of fees should you expect to pay? And listen, it's expensive. Closing fees are a large amount of money, and you have to be prepared for them and budget for them. And your mortgage representative is going to be the best person to walk you through all of that. Just on a side note, we are the credit union for the United Nations, but we're still a US based financial institution and subject to all federal laws and regulations. And we are required by law to issue to you estimates of closing fees at different stages during the process as they become more and more detailed. Um, and of course, we do that. We follow all of those federal guidelines. So information in a very clear and transparent way by law is now afforded to you throughout the process. It is a win for consumers, that federal law.
Excellent, thank you. You took the words right out of my mouth. The transparency that the members will see throughout the process is definitely key. You know, it can be a very complicated process, very complex
Yeah.
and anxiety driven. And to know that, you know, we're very forward with the process itself and demonstrate that transparency is key. You did mention our next session. I do want to give ample time for you to be able to cover the home buying process. So with that, we're going to wrap up this session and take our very first break, and we'll see everyone back in 5 minutes. Welcome back, everyone. I do see that there are lots of questions coming in, and it just demonstrates how fully engaged we are. So we do thank you for that. Keep them coming. If we do not get to them, please rest assured we will have a mortgage representative reach back out to you directly, so you will get your responses. Remember to use the QA feature on your screen to continue to submit those questions. And with that, we want to move on to our second session, the home buying process. And I'm glad to bring Chip back in to take us through this presentation. Welcome, Chip. Thank you. Please do
Thanks.
through the
Yeah,
home.
thanks so much, Sylvia. And thank you to all of our attendees for coming back for round two. Yeah, I'm so glad we've got so many questions coming in. That's great, and keep them coming. And I hope that this presentation will bring up even more questions for you, and hopefully answer a lot of them also. So for the home buying process, what are we going to cover? We're going to talk about choosing a property, and that's twofold, meaning choosing the different types of properties that we offer home loans on, houses, condos, etc., and also how you own that home, whether it's a primary residence, a second home, an investment property. We'll discuss the different types of mortgage loans that UNFCU offers: fixed rate mortgages, adjustable rate mortgages, which ones might work best for you. We'll talk about some promotions and reward programs that the credit union offers. Some of these are available all the time, 365 days a year, and some of them are brand new. We have two that are just being announced today, so we're really excited about telling you about them. And we'll wrap up this section of the event with a discussion about how you might use your home in the future for or to finance other needs. And we'll get to that in just a bit. Let's start off again, though, with choosing a property. So when you buy a home, you could buy that property as a primary residence, which sounds like, oh, that should be very simple. Sometimes there's some questions about what a primary residence means. For us, a primary residence is the home where you actively live. Let's say you work for the World Bank and you're buying a home in the Washington, D.C. area. You go to work in at World Bank and you go home at night, and that's the home that you live in. That's your primary residence. A little aside, it comes up as a question frequently for our members who have duty stations all over the world. And let's say someone has a duty station in Nairobi and they want to buy a home in New York. What's a primary residence, Nairobi or New York? Ultimately, we certainly can figure all of these out, and we'll find a path that's amenable for everyone. So primary residences are available, of course. We offer mortgage loans for secondary homes. Could be a vacation home. So let's say you live in Washington, D.C., and you want to buy a vacation property on the beach in South Carolina. So that's a vacation home. Or let's say you live in Nairobi and you want to buy a home in Massachusetts, where you and your family will visit periodically and use it for your own personal uses. That's a secondary or vacation home is for a member's or an owner's own personal use. Separate from that is an investment property. So if you're buying an investment property, you don't have plans to live in that home. You're buying it strictly for investment purposes, for the rental income that you can derive from that property. Investment properties are very popular for us. We do a lot of investment property lending. These are important. These designations are important because they represent the occupancy for the home. And the occupancy has a big impact on the terms of the loan that you're going to be able to get. What that means is, really, it's a risk analysis or a risk view for us as a lender or any mortgage lender. Primary residences have the least risk for us as a lender. It's just very rare that someone would default on the payments for the home where they and their family live. So for a primary residence, we give the greatest number of options, and we have the most liberal options for financing on a primary residence. Down payments can be minimal. Sometimes there's opportunities for lower credit scores or higher debt to income ratios. All of these various qualifying factors are going to be looked at in the most liberal view with a primary residence. Down payment, as I mentioned, is going to be impacted by occupancy. Second homes or vacation properties really are very similar to primary residences. There is a slightly higher down payment requirement for a second home, but not major. Investment properties are a bit different. So with investment properties, we require a larger down payment. Typically, the minimum would be 20%. Depending on the type of property, it could be as much as 30%. All of these are questions or issues that your mortgage representative will be able to review with you in that first meeting or any subsequent meetings. The impacts of the occupancy of your property. Now that we've talked about how you own it, let's talk about this, the different types of properties that we finance. Of course, we offer mortgages on single family residences. That's like a house in the neighborhood with a driveway and the tree in the front yard and the white picket fence in the front porch. Single family residence, most common type of home ownership in the United States. We also offer mortgage loans on multifamily properties, which would mean a property that has 2, 3, or 4 units. These are very common in cities, urban areas. Let's say you want to buy a 3-family property in Brooklyn. You live in one unit and you rent out the other 2 units to tenants. It's a great way to make money, to make rental income off of the home that you live in, and that offsets your housing expenses. Of course, there's another conversation to be had about becoming the pros and cons of becoming a landlord, but those are discussions to have with your mortgage representative. UNSU also offers mortgage loans on condominiums or condos. So condos could be a high rise in Manhattan or Chicago or Dallas. On a suburban scale, it's typically more, say, of a townhouse style condominium or a garden style condo, maybe built around a golf course or tennis courts, other types of amenities. Owning a condominium is legally very, very similar to owning a single family residence or a multifamily residence, meaning you own the physical property, it's deeded property. You can do what you'd like to with this home, meaning you can renovate it, you can sell it to whomever, whenever you'd like. You can rent it out to a tenant if you ever chose to do that. Condominiums do have a homeowners association, and that homeowners association is responsible for the common elements or the shared elements of that property. So if it's a high rise in Manhattan, those shared elements would be the lobby, the elevators, the roof, the exterior of the building, the basketball court, or the gym. All of those common areas are maintained by the homeowners association, and you pay a fee that goes toward that upkeep. On a more suburban style condominium, homeowners associations exist, they're there, but they are less involved. The homeowners association is probably responsible for the lawns, the gardens, the plowing of the snow in the winter, maybe some exterior work. Um, but there is that homeowners association fee involved with any type of condominium. Now, we also offer mortgage loans on cooperative apartments, which are frequently called co-ops. Co-ops primarily exist in New York City. There are certainly co-ops in the near suburbs of New York. There's some in Washington, D.C., Boston, Chicago. They're most common in New York. I won't spend a lot of time on co-ops because they are very specialized, but if you're familiar with a leasehold in the UK, a co-op functions most similarly to that. In a nutshell, a co-op, in a co-op, the building itself has become a corporation. So if any of you are familiar with Tudor City across the street from the UN, 5 Tudor City, 25 Tudor City, 45 Tudor City, each of those buildings is a separate corporation. When you buy an apartment in a co-op, you're not technically buying the apartment like you do with a condominium. Instead, you're buying shares in the corporation, just the same way that you would buy shares in Ford Motor Company or Coca-Cola or Apple. Ownership of the shares in the corporation gives you the right to occupy the apartment. I don't need to go too deep into all of this. If you're interested in buying in New York and you want to discuss a co-op, anyone's eligible to purchase a co-op, and we do a lot of co-op lending. I recommend that you speak with, again, both your mortgage representative and your real estate agent, especially because there are restrictions on your use of the co-op apartment, meaning most co-ops have restrictions on whether or not the property can be sublet, like could you rent it out to a tenant? The board of directors is also actually quite involved in who buys who can buy the property or the shares of the corporation, um, who it can be sold to, all of the buy and sell transaction involves the board of directors. So it is somewhat complicated. We deal with them every day. We're more than happy to work with you on co-ops. Most people end up buying a single or multifamily property or condominium. We work with all three all day, every day. So we've talked about what you can buy and how you can own it. I want to take a step back and discuss a mortgage pre-approval. You know, when you first meet with that mortgage representative on day one, and your mortgage rep conducts a pre-qualification for you, as I mentioned, that's just based on a conversation. And that's great. It's a fantastic starting point. But in the really competitive real estate world that we live in right now, you will probably be best served by having a more concrete or more formal step in this process, which is a pre-approval. I will tell you, pre-approvals are not obligatory on our part. So the credit union does not require that you be pre-approved for a mortgage. That said, a pre-approval will make you, as a buyer, a much, much more attractive candidate to a seller. With a pre-approval, once you've got a good idea of what it is that you want to purchase, maybe you haven't found the exact home yet, but you have a good idea of what it is you want to buy, you would submit an application for a particular dollar amount. We would document your income, your assets, all of those documents that we discussed before, the credit report. We would do everything except review a contract of sale and appraisal because you haven't found the specific home yet. We would fully underwrite, remember the underwriting team? We would fully underwrite this loan and issue to you a formal preliminary commitment letter or preliminary approval letter. And that letter says to a seller that as long as you find a satisfactory property, that your financing is already good. I can promise you, when Lisa is speaking later on in our event, she would agree that a pre-approval is, again, not a requirement, but very, very helpful for making your bid, your offer, as strategic and as attractive as possible to the seller. And if you think about it from the seller side, you've got two people who want to buy the home for $600,000. Buyer one says, I want to buy this home with $600,000. You're buyer two, and you say, I want to buy this home for $600,000. And here's my mortgage pre-approval letter that says all of my income, my assets, my credit has all been reviewed, and my lender has already approved me for this loan. That's definitely going to be a more attractive offer than poor old buyer one. So while we don't require the pre-approval, you very likely will be asked to provide one. There are certainly situations where a real estate agent or a seller may not want to entertain your bid or your offer without a pre-approval. So just be prepared for that. Okay, so you've been pre-approved. Now let's talk about the types of mortgages that are going to be available for you. The most common type of mortgage that we offer, that any mortgage lender offers, is a fixed rate mortgage. So with a fixed rate mortgage, it's exactly what it sounds like. You borrow a sum of money for anywhere from 10 to 30 years. 30-year loans are the most common and most popular type of loan, a mortgage loan in the US. They are spread out over the longest term, which means you pay us more interest. But because the payments are spread out over the longest term, the payments are lower, which helps on a month-to-month basis. It also allows you as a buyer to qualify for the largest loan amount, which frequently people are looking to do. Not in every case, but frequently. So again, the fixed rate mortgage is just what it sounds like. You borrow this money for 30 years and the interest rate never changes. So you always know exactly what your mortgage payment is going to be. These loans are really well received by people who have long-term ownership plans for a property. Let's say you're buying the home that you want to raise your kids in and have them all be in the same school district, in the same school system for the next however many 12, 15, 18 years. Or let's say this is the home that you want to retire in. The security and the safety ultimately of a fixed rate mortgage can be very, very attractive. We do have other options though. We have what are called adjustable rate mortgages, and that's what an ARM stands for. And as popular as fixed rate mortgages are throughout the industry, adjustable rate mortgages tend to be our most popular loans at UNFCU for a variety of reasons. The way these loans work is that you have a mortgage for 15 years or 30 years, again, typically 30 years. Instead of having the interest rate fixed for the whole 30 years, your interest rate is fixed for the first 3 years of the loan, or the first 5 years, or 7, or 10. The benefit to the adjustable rate mortgage is that for that initial period, 5 years or 7 years, whatever, the interest rate is lower than what it would have been on the fixed rate mortgage. So for someone who doesn't have plans to live in a home forever, frequently for our UN members, that is the case. Someone may plan to be in the New York area for 6 years and then, due to mobility issues, move on to another duty station. Why not take a lower interest rate for that amount of time? These loans are also attractive for someone who's looking to maximize the amount of money that they can borrow. That's not the best idea for everybody, but frequently it can be the case. If someone needs to borrow or wants to borrow the maximum amount that we can approve for them, the lower interest rate that's available on an adjustable rate mortgage allows that member or that borrower to qualify for a larger loan amount. Of course, there are risks that go along with this loan too, because after that initial fixed period, the interest rate is going to begin to change. It will change, and it will change every 6 months, and the rate can go up or down. There are caps on how much the interest rate can adjust per adjustment period and over the life of the loan. But the rate certainly can go up quite a bit, which would result in a higher monthly payment for you. So there are risks that go along with an adjustable rate mortgage. Let's go to the next slide and look at a comparison. We won't spend a lot of time on this, but let's say you have a $500,000 loan, and for the fixed rate mortgage, the interest rate, and this is strictly for example purposes, these are not true rates, but let's say the interest rate was 6.75%. So the monthly mortgage payment, the principal and interest payment on $500,000 would be just over $3,200 per month. On the adjustable rate mortgage, we've chosen one where the rate's fixed for 5 years. The interest rate is at 6%. In that case, the monthly payment drops to below $3,000. So what's that, a difference of $245 per month? Over 5 years, that would mean $14,700 in interest savings that you would not have paid to UNFCU on the adjustable rate mortgage. Important conversation for you to have with your mortgage representative, the stability and the predictability of a fixed rate mortgage versus the savings and the higher qualifying amounts for an adjustable rate mortgage. All great options. We're happy to review all of these with you and help you tailor the loan that's going to be best for you. Now, you can always, with whatever type of loan you take, we're not really talking about refinances in this event today, but you can refinance your mortgage. I'll make this less than a minute. When you refinance your mortgage, you take out a new mortgage loan to replace your old one. And people refinance for different reasons. It may be to get a lower interest rate. It could be to go from an adjustable rate to a fixed rate, or from a fixed rate to an adjustable rate. As interest rates go up and down, and they have really moved a lot over the past 5 years, up and down, people refinance for different reasons. But there are certainly ways for you to renegotiate the terms of your loan if that's beneficial to you in the future. Okay, so we talked about one of the questions after our last session was about closing costs. So let's talk about expenses in general. So, down payments. The amount of down payment that you are required to make, meaning the minimum that you're required to make, goes back to that occupancy type. So if you're buying a primary residence, you might buy it with as little as 5% down payment. On a multifamily investment property, you could be required to make a down payment of 30%. So, on a $500,000 mortgage, a 5% down payment would be $25,000. A 30% down payment would be $150,000. So the down payment requirements vary a lot. Important conversation, of course, to have with your mortgage rep. In addition to your down payment, you are going to have other fees to pay. And someone had asked about this during our last Q&A session. Who pays for all of these different expenses? And most of them are paid by you. Some will be paid by the seller, but the majority of them are going to be paid by you. And like so many other things that we've discussed today, closing fees are going to vary depending on where you're buying. It can come down to the state or down to an even low micro level of the particular municipality, the particular town or city where you're buying. A $500,000 loan in New Jersey, your closing fees probably $12,000 to $15,000. In New York City, just across the river from New Jersey, and you're buying within the 5 boroughs of New York City, your closing fees could easily be $25,000 to $30,000. So that's a big difference. Some fees apply regardless of where you're buying an appraisal. We do that on whether you're buying in California or Florida or Maine. But the biggest ticket items are various mortgage taxes. So some states tax your mortgage, regardless of your immigration status or the type of visa you have. If you're buying real property, if you're buying real estate, you have to pay those mortgage taxes. They're more expensive in some areas than others. So that's information you can find online. Certainly your real estate agent, your mortgage rep. We're happy to help with some of those amounts up front so that you can be well prepared if you're buying in a high cost area. Speaking of calculations, I'm going to do a little plug for our website. We have a great mortgage calculator. And as you want to look at, if you'd like to look at these payments, just like we had that comparison of the fixed rate mortgage versus the adjustable rate mortgage, go online and use our mortgage loan calculator. It's a really great tool. And you can look at all the different scenarios that you'd like. I would also say use our website in general as a great resource. We've gathered frequently asked questions from our members over decades at this point, and basically have them all referenced in almost a library online of questions that our members ask. It's a huge amount of information that's out there. And if you really are getting serious about this and want to really dive into it and feel like you're as well prepared as you can be from the beginning, I really recommend that you go online, certainly use the calculator, but go into our frequently asked questions in the mortgage page of the website. Great resource for you to use. Okay, so let's talk a little bit about some special promotions that the credit union has. Again, as I mentioned, some of these are available all the time, and we have some that are special for right now. So these first few are credits and benefits that apply at all times. So, in respect of out of respect for our green initiatives at UNFCU, we have a sustainable impact closing credit. So if you're buying a an energy efficient home, then we'll give you a credit towards your closing fees for doing so. First-time home buyers, always available with a first-time home buying program. You can make as little as 5% down payment. We have some programs that actually allow a little bit greater flexibility on some of those other qualifying factors. I had already mentioned this a little bit. Maybe your credit score isn't as perfect, or maybe your debt to income ratio, your percentage of your income that's eaten up by your new mortgage payment, maybe it's a little bit higher than typical. These programs have some allowances specifically for first-time home buyers. And on top of that, we'll also give you another credit towards your closing fees. Having a mortgage loan also makes you eligible for our member loyalty rewards program. So the loan balance, the amount of your loan balance, is going to make you eligible for UNFC rebates, extra dividends, and all sorts of rewards. Now, I'm excited about these because we've got two brand new promotions, and this first one is the first time we've ever done this. I've been at the credit union almost 25 years, and we've never offered something like this. This is a limited time offer. So for someone who purchases in the next few months, you can read all of the details. And you close on your mortgage loan. If interest rates drop within the next 12 months, we'll float your rate down. We'll drop the interest rate from whatever your original rate was here at the time of purchase to the then current interest rate. That's a $1,500 savings, because typically we charge a $1,500 fee for a member to modify their interest rate to move from a higher rate to a lower rate. So that's a great deal. No one has a crystal ball. I wish I did, but I can't tell you. But there is a lot of anticipation that mortgage rates might go down in 2026. We don't know that for sure. But if it's the case, this is the perfect time to have this great offer for a free interest rate modification. So I'm really excited, and I hope a lot of you will take advantage of that. The next one is specifically for you, our attendees for this event. So as a thank you, the first 15 attendees who submit a qualified mortgage application will get a $1,000 bonus from UNFCU. Upon closing, we're simply going to deposit $1,000 into your savings account. I mean, our idea is that you'll use it for moving expenses, but really you can use it for whatever you like. It's our thank you to you for spending your time with us and considering UNFCU for your home financing. And thank you. We're going to wrap up this portion of today's event with some opportunities for you to use your home in the future for other needs. So once you own your home, over time, as your mortgage balance decreases, you're paying down the balance, and as your home appreciates in value, homes don't always appreciate; they can depreciate, but over a long history, real estate typically appreciates in value. So as the home appreciates and your balance drops, you're building equity in your home. So let's say your home is worth $500,000 and you have a mortgage balance of $300,000. That difference of $200,000, that's your equity in the home. And there are great and very popular mortgage programs, mortgage plans that allow you to borrow against that equity in your home. If we go to the next slide, yeah. So typically you would borrow that money in the form of a home equity line of credit or a home equity loan. Again, these are super popular. The way a home equity line of credit or HELOC works, We open up a line of credit for you. Let's say it's $50,000 or $100,000. We do HELOCs of up to $500,000. It depends on how much equity you have in your home. We open up the line of credit, and it's a revolving account. So you can pull money out of the line of credit whenever you need to or whenever you'd like to. And you can use it for whatever you would like. Many people use it for home improvements or renovations, putting in a swimming pool, putting on a new roof. It could be for education expenses, whatever other family expenses that you may have, or just needs in general. A lot of people like to have a home equity line of credit just for the security of having it in case you ever needed to tap into the equity in your home. You'd already have it lined up. There's two different payment options. You can go a traditional route where you would make a principal and interest payment for your HELOC. We also have an interest-only option, which has proven to be very popular. So you only pay the interest each month on the balance of the equity line that you've used. Great deal. For someone who's a little bit more conservative, we also offer a home equity loan. So with a home equity loan, you borrow a lump sum of money with a fixed interest rate for a fixed term, and you simply pay the money back over the next 10 years or 15 years or 20 years. Whichever product you choose, these are very popular. It's a great way for you to finance other needs at a much lower interest rate, certainly than what you would pay on a credit card or on any other type of just signature or personal loan. Because just as with the purchase mortgage, home equity lines of credit and home equity loans are secured by your home, and secured loans have the lowest interest rates. So these are a great option for some time down the road. Our last slide today, or at least in this section, is not technically about mortgages, but I would be remiss if I did not bring it up. The credit union has a really unique program, incredibly popular with our members. It's specifically for UN staff members, but we have an international home loan. This is a loan designed specifically to purchase or build a home outside of the United States. You can use it anywhere in the world. Of course, you'd want to check to see how the terms of this loan compare to the terms that you may be able to get locally. But for a lot of our members who want to buy, whether in their home country or where they're going to be stationed for some time, it's a great opportunity. And it's a very unique program, and it was developed over quite a few years of listening to our members tell us this is something that they really wanted. And I'm very proud of the credit union for developing this unique program that I don't know any other lender in the United States who has such a program. So if you're interested in buying a home outside of the United States, and hopefully in the United States too, but if you are interested, please go to our website and look up this international home loan. I think that you'll find it very, very interesting. So thanks for your time. Sylvia is going to come back and we'll try to answer some more questions for you.
Thank you, Chip. A wealth of even more information for our viewers. I do definitely want to thank you for referencing our website and the FAQs that we have gathered throughout the years. It is an abundance of resources available to all. We also do have quite a number of additional questions for you. And first up, we have, if UNFCU member is a homemaker, so has assets but no income coming in, and the non-member spouse is the income earner, can the spouse of the UNFCU member get a mortgage through us as an individual, or would UNFCU only provide a mortgage to them as a couple?
Wow, that brings up quite a few questions. I'll try to make it quick because we've got a lot of questions, but this is a great one. A couple things. One, UNFCU membership is open to anyone. Back when I started in the year 2000, credit union membership was limited to UN staff members and their families. Now anyone, anywhere can join UNFCU. Certainly spouses are still welcome to join. In this member's particular case, you really have the choice to structure a purchase however you'd like. As a non-income earning spouse, you could still be joint on the loan. That's fine. Some married couples like both to be on the application, even if only one is earning that income. We could do it in the income earning spouse's name only. That's also fine. I do want to take one step back. Some of it could depend on the state. So, for example, California is what's called a community property state. If you were buying there and you're a married couple, you have to buy jointly. That's not a UNFCU issue. That's a state law issue in California and some other states in the US. Barring those restrictions, you can really structure this however you'd like to. Whatever is most advantageous for you, we would be happy to make it work.
Excellent. It's nice to hear that there are options to realize those dreams. So you did mention some programs. So how about those who have zero down payment? It's been heard that there exists a program which can help first-time home buyers, and you talked a little bit about that with their down payment, and they want to know how much truth is there?
Listen, there are programs out there in the marketplace that offer 100% financing. They're not as common as they have been at different times. Say in the early 2000s, just before the Great Recession, there were a lot of 100% financing programs out there. Most of them went away. The majority of 100% financed loans are now available through the federal government. We don't really offer that many of those types of loans. The main reason being that many of our members who are not U.S. citizens or permanent residents aren't really necessarily eligible for those loans. And so it just doesn't make a lot of sense for us to focus on them. For us, the minimum down payment would end up being 5%. Now, can you research grant programs? Yes, we have a grant program that can allow even up to $30,000 for eligible members and eligible applicants, and that money can be used for expenses, down payment, etc. It typically would not provide 100% financing, but it would go a long way toward it. So, certainly discuss with a mortgage representative. I guess sort of maybe disappointingly, I have to say that there are 100% financing or no down payment loans out there. They're not as common as they used to be, and we don't offer them.
Gotcha. Okay. So our next question from a member is, given this, does that some are outside of the US, does credit score impact interest rates? And how and by how much, if you can shed some color on that?
Sure, credit is, over my many years at UNFCU, is always a source of mystery and question. So if you don't have a credit profile in the US, it's fine. We can work with you on developing an alternative credit profile. Typically, that means things like a landlord reference letter verifying that you've paid rent on time, or perhaps you have a cell phone plan from, I don't know, Switzerland or from Uganda or from Japan. I mean, you can show proof that you paid your cell phone bills or proof that you paid your electric bill, utilities, whatever it may be. We're very creative in finding information that can help develop that alternative credit profile for us. Now, the bigger question, or a question, How does the score impact your loan? Now, we have a variety of programs where the credit score doesn't impact the interest rate at all. So whether you have zero credit because you don't have a credit profile at all, or maybe your credit's not perfect, or maybe your credit is excellent, 820. Some of these loan programs have interest rates that are the same regardless. Now, we do have some loans, particularly our fixed rate mortgage products, not all, but the majority of them, where credit score does impact the rate. And so someone with no credit may not even necessarily be eligible. You may have to go with one of our adjustable rate products. Um, we've always tried to maintain a set of attractive loan programs. As I mentioned, the adjustable rate mortgages are our most popular and most common types of loans that are available regardless of credit score for our members. Some of our other products are credit score based or focused. So we would help you, pick and choose and review and decide which of these programs would work best for you. We definitely can work around it. I've never seen a case where now someone could have really poor credit. Now that's different. If you have a very low credit score because you haven't been very good at paying your bills on time, that's different. You may not be eligible for a mortgage because of that. But if you have no credit score or a low credit score because of a limited credit profile, I've never seen a situation in all my years at UNFCU that we couldn't find a way to make a loan work for that person.
That's good to hear. We are coming up on time, but I do want to give the attendees some insight on how would they go about submitting a mortgage application? Because you did mention that promotion that we have going on for the first 15.
Yeah. Okay. Um, Certainly, the fastest way to apply is online using that our unfcu.org website. Um, go to the borrow tab and then you click on US mortgages. Regardless of where you live or where you are located, you would choose buying a home in the US. And once you've clicked onto that, it will take you to a link to select a mortgage representative, depending on your relationship to the credit union, and take you right into the application.
All right, great. Thank you. So that wraps up our home buying process session. We're going to take our second 5-minute break. And when we return, we'll bring Catherine in to share some information on the benefits that you get as a member of UNFCU. We'll see you in 5. Welcome back, everyone. We are now ready to begin our third session of today's event. I want to go ahead and bring in Catherine, our Premier Member Service Supervisor at UNFCU, and Catherine will take us through the membership benefits presentation. Hi, Catherine.
Hi, Sylvia. Thank you very much. Hello, everyone. Again, my name is Catherine Cano Martinez, and I am the supervisor here at Premier Services. And I'm excited to talk to you today about the benefits of joining United Nations Federal Credit Union, or UNFCU. As a member-owned financial institution, UNFCU offers much more than traditional banking, from globally accessible services to lower fees and personalized support. Membership is designed to make your financial life easier wherever you are in the world. Next slide, please. To help you understand the full value of UNFCU membership, I'll walk you through 2 key areas. First, financial security, because protecting your money and personal information is at the core of what UNFCU does. And second, global banking, how UNFCU supports you no matter where you are in the world. Let's start with financial security. Financial security is one of the top priorities at, just back up, yes. Yes, it's one of the top priorities at UNFCU. As a member, you benefit from secure online mobile banking platforms, strong encryption, and constant fraud monitoring to keep your accounts safe. Plus, your deposits are federally insured up to $250,000, giving you peace of mind that your money is protected no matter where you are in the world. Of course, financial security is just the beginning. At UNFCU, we believe that a strong financial foundation should be backed by a membership that truly works for you and your family. One of the unique advantages of UNFCU is that it's a credit union, which means members are also part owners. This means that you can vote for the directors of your choice to the board of directors. That gives you a voice in how the credit union operates, and it means everything we do is designed to serve your needs, not shareholders. Another great benefit is that once you join, you're a member for life, even if you change jobs, retire, or relocate. And membership isn't limited to just you. Your immediate family, including your spouse, children, grandchildren, parents, and grandparents, and siblings, as well as eligible beneficiaries, can also join and enjoy the same trusted services. So it's not just about individual benefits, it's about building long-term financial security for your whole family. If you're not yet a member and are interested in joining, reach out to us. We'll be happy to guide you through the application process. Being a lifelong member and having your family included comes with a peace of mind that your financial institution puts your interests first. And that includes making sure your money is safe wherever life takes you. One of the biggest concerns when choosing a financial institution is knowing your money is safe. At UNFCU, your savings are federally insured by the United States government through the National Credit Union Administration, or NCUA, for up to $250,000 per account. This protection applies to all members, no matter where in the world you're located. So whether you're posted abroad or back home, you can have full confidence that your funds are secure. And if you'd like to learn more about how this coverage works, you can visit unfcu.org/NCUA. Now that you know that your savings are protected with UNFCU, let's talk about how we go beyond security to help you take control of your financial future. At UNFCU, we don't just provide secure banking. We're also committed to helping you build financial confidence. That's why we offer a variety of resources tailored to your needs, including a dedicated help center, easy to understand product guides, and frequently asked questions to answer common questions. Today's webinar is one example. You can also use helpful tools like calculators, like Chip had said earlier, to plan your savings and budgets. Beyond that, our financial wellness page offers articles, videos, and live webinars designed to educate and empower you to make smart financial decisions. With these resources at your fingertips, UNFCU supports you every step of the way toward achieving your financial goal. As you build your financial knowledge and confidence, having access to the right tools is essential, especially when your life or work takes you across borders. Now let's move on to the second key benefit, global banking solutions. Whether you're saving, spending, borrowing, or transferring money, UNFCU makes it easy no matter where you are in the world. From competitive rates on loans to convenient international transfers and globally accepted debit and credit cards, UNFCU ensures your money works for you across borders. Let's dive deeper into some of these global banking services and see how they can benefit you. UNFCU helps you grow your savings with a variety of options designed to fit your financial goals. Our high yield savings account is easy to open with no minimum balance, and you can add or withdraw money anytime while earning a competitive interest. Keep in mind, if you make more than 6 transfers from this account in a month, a small fee applies. That's because it's designed as a savings account, not for everyday transactions. And it rewards you with higher dividends the more you save and the longer you keep your funds there. For longer term savings, we offer share certificates with terms ranging from 3 months to 60 months. These can be opened with $250 or more and can be renewed at maturity. Like most term deposits, if you withdraw money from a share certificate before it matures, you will incur a penalty. So it's important to choose a term that matches your savings timeline and make sure you won't need access to those funds during that period. With the right plan, share certificates can help your money grow with even higher dividends based on the term you select. Now that we've covered how to grow your savings, let's look at how UNFCU supports your spending needs globally. When it comes to everyday spending, UNFCU makes managing your money simple, flexible, and convenient with checking accounts that have no minimum balance requirements, so you can open one easily without worrying about maintaining a certain amount. You also get unlimited transfers, withdrawals, and debit card purchases, all based on your available balance. That means you have access to your money whenever you need it, whether you're paying bills, shopping, or transferring funds globally. Now that we've talked about spending with checking accounts, let's look at another way UNFCU supports your day-to-day and global financial needs with credit cards designed to match your lifestyle. So UNFCU offers 2 Visa credit card options, the Elite and the Azure, each designed to match different spending habits and lifestyles. The Elite card is ideal for travelers. It offers no foreign transaction fees, 5 free VIP airport lounge passes per year, and 24/7 concierge services. The card has a $50 annual fee, but members who travel often find the perks are well worth it, as the Elite card combines convenience, comfort, and global protection. The Azure card, on the other hand, is perfect for everyday use. It includes price protection, so you can be reimbursed if an item you buy goes on sale, return protection if a merchant won't accept a return within 90 days, up to a $250 purchase value, and cell phone protection if your phone is lost or stolen, as long as you pay your bill with the card. The Azure has no annual fee, but keep in mind that there is a 1% foreign transaction fee when used outside of the US. So whether you prioritize travel benefits or whether purchase protection, UNFCU has a card that fits your needs. Now, let's look at how UNFCU helps you when you need to borrow, with flexible loans for every stage of life. UNFCU offers loans to support you through all of life's important moments, from buying a car to handling unexpected expenses or financing a big goal. Our loans come with no application fees, no prepayment penalties, so you can pay off your loan early without any extra costs, saving you money on interest. On top of that, as a borrower, you can earn member loyalty rebates and dividends. These rewards recognize your ongoing relationship with UNFCU, giving you bonus dividends on your savings and rebates on certain fees like ATM withdrawals and wire transfers. Your loyalty level, whether silver, gold, platinum, or diamond, determines the amount you can earn. And these rewards are credited automatically to your account each month. So when you borrow with your UNFCU, you're not just getting a loan, you're building a rewarding partnership that benefits your whole financial picture. After you've taken advantage of our flexible loan options, UNFCU also makes managing and moving your money simple, whether you're sending funds locally or across the globe. UNFCU makes it easy to send and receive money around the world with no hidden fees on outgoing transfers and no fees on incoming transfers from other financial institutions. You can send wires in multiple currencies to trusted contacts globally with competitive exchange rates and full transparency. For domestic payments, we offer ACH transfers, and you can also set up external transfers to link and move money between your UNFCU accounts and your other accounts at other banks. UNFCU also supports global banking needs with multi-currency accounts and international transfer options designed specifically for members living or working abroad. No matter where life takes you, UNFCU gives you the tools to manage your finances smoothly, securely, and without hidden costs. Managing your money globally is just one part of the experience. With UNFCU's digital banking, you have full control of your finances right at your fingertips, anytime, anywhere. With UNFCU digital banking, you can handle all your essential banking tasks quickly and securely online through our mobile app. Easily designate and update beneficiaries, open new deposit accounts, or apply for loans and credit cards, all without visiting a branch. You can also view your statements, set up customizable card and account alerts to stay informed, and sign in securely using Google Authenticator. Google Authenticator is a free app that provides an extra layer of security by generating unique, time-sensitive code each time you log in. This helps protect your account from unauthorized access, keeping your personal and financial information safe. It's banking made convenient, secure, and designed to fit your busy lifestyle. So to sum up, UNFCU is more than just a financial institution. It's a member-owned community dedicated to your financial well-being, from secure savings and smart spending options to flexible borrowing and global transfers with no hidden fees. UNFCU provides the tools and benefits that fit your life wherever you are in the world. Our member loyalty rewards recognize and appreciate your ongoing relationships, while our digital banking platform gives you convenient, secure access to manage your finances anytime, anywhere. Thank you all for your time and attention today. I appreciate the opportunity to share how UNSCU can support your financial journey. If you have any questions or want to learn more, I'm happy to help.
Thank you, Catherine. We do have lots of questions coming in for you, and I'm sure you'll get some upon completion of the event today. Lots of benefits I heard there in your presentation, but it sounds like some of our members are still on that lending mindset. So they want to know if you have any advice on loans for those attending college or university.
So we do have educational loans for those attending, school. These loans, once you become a member, you can apply for these loans. It all depends, you have to apply and you have to be approved.
All right, excellent. Thank you. It's nice to know that we can offer support to those children of ours. And moving it back to some of our other types of services and accounts that we offer, member would like to know, how can monies be added into a share certificate?
Oh, wonderful, wonderful question. So a share certificate is an account that you establish. You can do it in person, you can do it on digital banking. This once you're opening the account, you're going to choose an amount that you're going to open it with. There is one account that's open with 250. Most of them are open with 500 or more. But once you make that initial deposit into that account, it will stay there for the term that you've chosen. You will not be able to add any funds to those accounts, except for one specific account that we have that you can. But to the other share certificates that we have, you would not be able to until its maturity. If when it matures, you decide that you want to add more funds, you can do that.
All right, great. And what about emergency funds? Would this share certificate, be able to be the tool for that, or what types of savings accounts would you say would be best for emergency funds?
So an emergency fund is something that you want to have liquid. You want to have it available. So we would say the high yield savings, it earns dividends based on the funds that are on the account. On our website, you can see the different rates that we have, but that would keep your money liquid and still earning a high interest.
Thank you. Is there a maximum to the number of accounts, specifically the max share CD, that a member can open in a given time period?
No. So you can open multiple share certificates at any time. Again, we have different terms. These terms all go with a different interest rate. So depending on the interest rate that you want, you would choose that share certificate. If you open one today and then tomorrow you have more money that you want to put to save, you can just go ahead and open another one.
Gotcha. Looks like there's a lot of piggybacking on multiple products with us. So can a member have both credit cards concurrently? So you mentioned two types of cards.
Yes, yes. So we do have the Visa Elite and the Visa Azure, and you can apply for both cards.
That's great to hear. Thank you. Um, Now, you as the Premier Service Member Service Supervisor, what is a Premier Member Service? If you can just share a little bit more on that.
Or a Premier Member Service is having somebody dedicated where you can actually call us directly. You can have that access with us. We do this for our Premier members, which are the mortgage applicants. So when they apply for mortgage, we help establish their membership here at UNFCU. Once the account is established, we're calling them directly to welcome them to UNFCU to assist them if they need us. Once the mortgage has been established, we contact them again to see if they need assistance with, let's say, setting up their payments for their mortgage, or if they looked at our website and now they're interested, let's say, in a share certificate or things of that sort, we're here to assist that.
Thank you, Catherine. Same as I mentioned to Chip, it's definitely providing peace of mind and knowing that we have a team, that's able to support at all times our membership. All right, so that brings us to the end of this session. We are going to go ahead and take our last 5-minute break. And when we returned, we will bring Chip Allen back. We will also be joined by Chris Skidonakas and Lisa James for our FAQ panel. Welcome back, everyone, and thank you for remaining with us for our FAQ panel with experts. It's now time to bring our panelists to answer your submitted questions. We have Chip Allen, our AVP of Branch Mortgage Protection, which you heard of earlier today. He will be specializing, obviously, in the home buying process. We have Chris Gidanakis, real estate attorney at the Gidanakis and Corona law firm, expert in real estate law, and Lisa James, experienced licensed real estate salesperson with the Morris team at the Cochran Group. Welcome, and thank you for joining us during our FAQ session.
Thank you so much.
Thank you.
Thanks, Sylvia.
All right, so we have lots of questions piling in here, and we'll try to get through as many as we can. First up, we have for Chip. We did talk a little bit about down payments during your presentations, and the members want to know, well, how much of a down payment is actually necessary? What are we looking at?
Great question. And, I have a long answer that I'll try to make short because down payments vary, and requirements for down payments vary. There are a lot of factors that come into play. Typically, for someone buying a single family residence, for us, the minimum down payment is 5% of the purchase price. As I mentioned in both of those presentations, a lot of the decision making is really based on the locale of the property. So Lisa would attest that if you're buying a property in New York City, this is not a legal requirement, but in New York, the standard down payment is 20% of the purchase price. If you're buying a co-op apartment, that's probably a requirement for them. But just the standard operating procedure in New York is that someone makes a 20% down payment. Meanwhile, if you're buying in Florida or Michigan or North Carolina, a much lesser down payment would be very common. So down payments vary a lot. I wish I could give just a definitive answer. It's like, oh, this is how much you should expect. I mean, the standard down payment anywhere or the ideal down payment for any buyer anywhere in the US is 20% of the purchase price. That's a lot of money. But that is really the sort of the gold standard, and it's what a lot of buyers would like to see. But with the pre-approval in hand, to strengthen your application, your request or your bid, you could certainly look at buying a property with less than 20% down payment.
Thank you, Chip. It definitely does give us a target to go on. Just to follow up on that one, the pre-approval, how long is that good for?
Okay, the pre-approval is good for 120 days. If it were to expire, that you didn't find a home in that initial 120-day period, that's fine. You do not necessarily even need to reapply. We would need to get your authorization to run a new credit report, because credit reports that's really what's causing the expiration. Credit reports are good for 120 days. So once it expires, we would need to get a new one. We would probably ask you for some updated bank statements and pay statements just to keep the file active. Not a lot of steps would be involved. It would be a quick process to extend your pre-approval.
Gotcha. Great. And so now we have that pre-approval in hand. Lisa, how would I know that the asking price for the house is fair?
So, good afternoon, everyone, and thank you for having me. That's a great question. So, in order to determine the fair value of a property, us real estate professionals will generate what's called comps, and we look at the most recently sold properties within a 1 mile radius that have sold within the past 3 months in the immediate area. We often use those figures to price the property, but then we revisit those comps at the time when a buyer may be submitting an offer. So one piece of advice that I would give to all buyers when you're engaging your agent or even looking at properties, it's important to look at what is selling in the area most recently in order to determine the value. The other thing that I will add is that even after that value is determined, sometimes the buyer's need for the home or their want for the home will or could potentially increase the offer. So simply put, when one buyer may want another property more than another buyer, that's when you run into a multiple offer scenario, or what we call a bidding war. But you can kind of figure out where your offer is by asking your agent for the most recent comps in the area.
Gotcha. Excellent. Thank you. And Chris, can foreigners buy homes in the US without a residency permit? Kind of piggybacking on that one too, do I need a green card or a specific visa to buy a home in the US?
Excellent question. Thank you so much for having me as well. No, you do not need any type of status in the United States to purchase property, whether residential or commercial within the United States. Often within the United Nations, we have G4 visas, but people will still own the property after those visas expire as well. Nothing is stopping you from owning them. However, there are differences in your ownership and how you handle your ownership, whether you're a full US citizen or whether you're a foreign national, and depending on what type of visa you're on.
Gotcha. Thank you. And Chip, just going back to that down payment, do you charge PMI for less than 20% of the down payment?
Okay, that's a excellent question. Somebody's been doing some research. I'm going to backpedal for just a quick second and explain what PMI is. So PMI is private mortgage insurance. PMI is an industry standard. It's required by the vast majority of lenders if a buyer is making less than a 20% down payment. What PMI does is ensure us as the lender. From lender's perspective, a loan with less than 20% down payment is riskier. So we want to be insured that if we lend, say, 90%, and the buyer makes a 10% down payment, if they were to go into default on their loan, we would be insured for that portion over 80%. So that's what PMI is. It's an added insurance premium that you pay when you make less than a 20% down payment. Nobody wants to pay PMI, but it's a means to an end, and it allows someone to buy a home with less than 20% down payment. I would tell you that ultimately PMI does go away. So through a combination of appreciation in value and also payment toward the principal of the mortgage balance, PMI does ultimately go away when you've achieved 20% equity in the home. But yes, we do charge it. Short answer.
Short answer. Thank you.
Yeah.
You too, Bridget. All right. So we wanted to have a better understanding of what that dollar amount looks like. Lisa, I'm hoping that you can assist with this question. Average cost of homes. This member particularly stated New Jersey, but I know that you're here in New York, so if you can, it's still the metropolitan area, share some of that with us.
So I think the average prices of the homes, we are going through an interesting transition in real estate a bit. And that primarily has to do with not just the interest rates, but also the commissions. So the average prices of the homes really depends on what type of property you're purchasing, whether it's a condo, a co-op, a single, or a multifamily. So I think what's really important in order to kind of get an idea of where the average single or multifamily home prices are really depends on the location that you're looking for. In Jersey, for a single family home, we're probably looking upward of anywhere between, it could be as high as maybe 6 to 750. There have been many fewer homes on the market that are under $500,000. But it really depends on the property type and the location. If the member would like to reach out to me to get a very a custom comps report for the area, I'd be more than happy to do that.
All right, thank you for offering that. In addition to that property type, we have a question on ownership type, and maybe Chris, this may be one for you. For international buyers, what would be the advantage of buying under an LLC if possible?
So I do love LLCs. It is part of our normal practice to prepare them for our members and also to purchase properties under them. Traditionally, an LLC's best asset for you is limiting your liability in the event that there's a lawsuit related to the property. When you're purchasing within the 5 boroughs, an LLC can get a little pricey because part of the setting up process requires you to take out space in a local newspaper and notify people that the LLC has been created. If you're buying in Manhattan, that could be an extra $1,200 fee. If you're buying in the outer boroughs, that could be around $1,000. The whole setting up of an LLC can cost anywhere from $2,000 to $3,000 all in. For this reason, I usually tell my clients an LLC's best asset is if you are renting out the property. So if you do want to purchase in an LLC, make sure that this is more of an investment for you, because you're really going to want to limit your liability from all your other personal assets. Otherwise, you're not really setting it up for a big benefit to you. There's other options as well. If you don't want to own an LLC, you could also purchase in what's called a trust. A trust has similar protections to an LLC that would protect you. However, in the long term, a trust is there for an estate planning purpose, so you can make sure that the property goes where you want if something were to happen to you. Normally, I would lean somebody more towards a trust if it was their primary residence in the long term, but an LLC is a great vehicle for anybody who's looking to make money on it.
Hey, thank you. We do have a question on tax. Can we tax deduct our mortgage in this following situation? So, we buy the property in New York as a primary residence, and I, as the spouse of a UN employee, work under a G4 working visa. And I pay US taxes on my income, and my partner is a UN employee not paying taxes. So can we tax deduct our mortgage?
So I will take this one, but I always start any question that regards tax to state that you should go to an accountant anytime there is a tax-related question. We have a payment called SALT. It's state and local taxes as well as interest that you pay on your mortgage. They are, to some extent, though I can't tell you your exact range, a write-off when it comes to your taxes against the income that you have. Now, to your partner who's on the G4 visa working in the United Nations, obviously they're not paying any income tax on the income coming from their salary. So there's nothing to write off tax against. However, if you have what's called taxable income, there are limits and there are things that you can write off. The reason why I say to talk to an accountant is, one, I can't give actual tax advice, whether it's good for you personally to try to write it off or not. And two, it's highly dependent on what your total income is, as well as what the limits of the SALT write-off are. And on top of that, whether it's higher than what's known as the standard deduction, which you're automatically allowed to take out. So it's a very complex calculation that you have to do, and it's best to speak to a tax advisor about.
Thank you, Chris, for that guidance. Definitely well understood. Chip, you had mentioned some sustainable program mortgages and things like that. I think it has drummed up some inquiries under what's happening with climate today. So how do you know the home is in a flood zone?
Okay. That's a great question, and very relevant. So FEMA, the Federal Emergency Management Agency, which is a federal US agency, they create various maps that lenders and other parties use to determine whether or not a particular property is in a flood zone. And it can be surprising what is. It doesn't mean that you're sitting necessarily on an oceanfront property that you're in a flood zone. And you may well be in that case, but you could be, near a small stream that is subject to flooding, and you could be in a flood zone. So the determination of who is in a flood zone or what property is in a flood zone is based on FEMA maps as provided by the federal government. And those maps are the final answer, and they dictate whether or not someone will need to have flood insurance or not. And we run every property through FEMA mapping. It's a requirement by law. So we have to run every property through the FEMA review.
Gotcha. That's good to know. What if I needed to sell this property now? Does UNFCU have early mortgage payment penalties? If it's an option, does it affect your mortgage rate, I believe is what they were asking.
Okay, so I mean, I'll take that. Our mortgages do not have any type of prepayment penalty. So you can pay off a mortgage loan with UNFCU at any time. Some people pay extra per month just to pay down the balance faster. A member is welcome to make extra principal payments just at any random time. Or you're welcome to sell the property and as part of that sales transaction, pay off the balance of the mortgage. There's no penalty in any of those cases for early payment of the mortgage.
Gotcha. Thank you.
Mhm.
Um, I know that we talked a little bit about condos and co-ops. This one is more for Lisa now. What are the pros and cons of buying condos and co-ops? Well, here in New York, I know we have lots of them.
Yeah, that's always a common question. First thing to understand the difference between a condo and a co-op. A condo is real property, whereas a co-op or a cooperative, a purchaser in that regard, they're a shareholder. So it really depends on the type of ownership that you're seeking. It's also important to note, to Chip's point, when purchasing a co-op in New York City, the average down payment or minimum down payment requirement is 20%. There is a possibility that you could purchase a condo in New York with less than that. The other thing that I will mention is that for the condos, you really have full control, and you also have the option to potentially sublease it. Purchasing a co-op does come with more restrictions, but I will tell you, for most of our clients who purchase co-ops, it has to do with the maintenance of the unit. If you want to be a little bit hands-off, and kind of have professional management and maintenance in place, a co-op is a great way to go. You may have the option to also deduct some portion of your maintenance fees on your taxes, but to Chris's point, we advise that people speak with their accountant on how to structure that. Um, there are a lot of co-ops in New York City, and there are a lot of new development condos in New York City. But it really, like I said, it really comes down to the type of ownership that you want and really how you want to live day to day. There are a lot of co-ops that have pretty diverse communities, a lot of amenities on site. And I think depending on your lifestyle, but also depending on location, will determine whether or not you're choosing a condo or a co-op. But I would instruct any of our clients or anyone that's interested to not write off co-ops. I know that a lot of people are often scared of the board, but there's a reason why they're like true and tested in New York City. I think it's a great opportunity for first-time home buyers, but also people who may be looking to downsize, and get a kind of, a really comprehensive community where you can live long term.
Gotcha. Thank you. Um, what about purchasing foreclosed property? Can you share some insight on the process there?
Yeah, so I get a lot of questions from prospective buyers who are looking to purchase foreclosed properties. And I think that the belief is that the properties are always going to be cheaper or less expensive than a property that may be finished. You absolutely need to conduct your due diligence when you may be considering a foreclosed property. Um, Not only are you partnering up with an agent, but you really need to bring your attorney on board as quickly as possible, because once you start the home buying process as a buyer, you're putting out labor, time, and effort. And you really want to understand the history of the property before you end up getting into contract or being in a really long contract period for a property that may not necessarily be the best choice. I will say that I have seen a lot of our clients purchase foreclosed properties. They're typically not public. They're what we consider to be off market. And you may not necessarily see a lot of those homes, on the internet. So what I would tell people is that if you're interested in pursuing a foreclosed property, it's really crucial for you to get your team together. Often that team could also include a contractor, an architect, because very often there's work, interior and or exterior work that may be required. But purchasing a foreclosed property is a very viable option for many. It just definitely requires a little bit more patience and a really high level of commitment to understanding the history of the property so you know exactly how to move forward.
Gotcha. And then going back to that team, Lisa referenced Chip, uh, although not mentioned that the board is part of this team, but they do play a role in the process when it comes to those co-ops, and the members would like to know, when does the board come in? At what part in this home buying process does the board need to be reached out to?
Yeah, Lisa, I think that's probably best.
Oh, it is?
Yeah.
Bring that back. Lisa, go.
So from the time that you have a fully executed contract, meaning that the contract is signed by the buyer, the seller, and certified by the attorneys, it is at that point that the buyer, with the help of their agent, obviously, is preparing their board package. At any point after the contract is executed, the board package can be delivered to the board. And most co-op boards have scheduled meeting dates and scheduled meeting times. So you have to know that part of the reason that some buyers deem co-ops to be a little bit risky is because even after your offer is accepted by your seller, you run the risk of being declined by the board. So it's really important for you to work with an agent who is going to do due diligence on the co-op, understand and read the board meeting minutes, confirm if there are any arrears in the building, and also try to get the meeting for you in the event that you get the purchase application to the board and you're scheduled for an interview. Your agent, and truth be told, your attorney as well, is going to give you some tips on how to successfully, get through your board interview. There are some co-ops that don't have board interviews. So every now and again, I definitely get clients who may want to pursue a co-op that doesn't require a board interview because it makes them feel a little bit more confident going to the transaction. But like I said, in New York City, there are tons of co-ops and there are people purchasing and having successful transactions. And it's really the preparation for the interview and ensuring that you have all of the financial requirements together in order to have a successful interview.
All right, got it. Thank you.
Yeah.
So I'm going to put this one out there and you all can decide who could best approach this one. What advice can you give to personnel based on in a duty station outside of the US in terms of home ownership and home search?
I'll take a kind of quick start on this one. I think everybody on this panel is very familiar with UN members, foreign nationals, and people who are just generally sometimes not in the country. It is important to make sure, first and foremost, that your team is familiar with this, people who can use either international forms of communication, something as simple as WhatsApp, and also being able to set up digital signatures for contracts in order to make sure that we move things along, as well as somebody who completely understands how to set up the power of attorney. For a lot of my clients, if they're not going to be around for closing, we're able to set up a document that allows somebody within the United States to sign on their behalf. They're able to also wire funds, usually to my account, prior to closing, and we'll be able to execute the closing that way. Now, there's a lot more to this because I really just do the mechanics of it to make sure that the deal goes through, other than my due diligence. But that doesn't cover, obviously, seeing properties and looking at them. I'm usually showing up after the property that you like has been found.
I'll just piggyback on Chris's point. As far as the home searches, we do for international buyers, even domestic buyers. The reality is that we do a lot of virtual tours. So I also operate in the capacity of an exclusive buyer agent, which means that I am previewing properties. I am doing property tours and taking videos. I'm sending these videos over WhatsApp. Um, some of the property tours are on Zoom. So seeing the property is less of an issue. There are also 3D tours, which give you a pretty good interior view of a lot of the properties. And then to the extent that we're talking about submitting offers, yeah, submitting offers, submitting board applications, to Chris's point, a lot since COVID, a lot of the work has moved to collecting electronic signatures and trying to figure out how to still move the process forward, even though people may not be in person. Some of those processes continue today, and I think it's really helped in a world where there's real estate happening both domestically and internationally. So if we can see any property whenever you want to see it, regardless of the time zones.
And Sylvia, I would just say very quickly, I think that Chris and Lisa both have demonstrated that having a real estate agent and an attorney who know how to deal with someone outside of the United States is really important. From the mortgage side of it, there's really not very much difference. This is actually probably the easiest part of it for someone who's not in the U.S. because we do all of this electronically now anyway. So whether someone is in Florida or in New Jersey or in Entebbe, it doesn't really matter for us. There may be some additional documents that we need for, housing expenses overseas or whatever, but those are just documentation issues. So from the mortgage perspective, it doesn't really make a difference for us.
Gotcha. Thank you. This is bringing it back to putting ourselves in a position where there is a choice by the seller and, how can we better position ourselves? So what would make buyers with loans preferred by sellers when cash buyers are involved?
I am in that scenario today. I have
Do tell us.
yeah, I currently have a townhouse on the market. I got about 14 offers, 6 are cash, and the rest of them are financed. Depending on the property's interest, not all cash offers are the best offers. What often happens is people are, cash offers are, while they say cash is king, sometimes a cash offer could come in at a lower price than a finance offer, right? What I tell all the clients is that it's really the terms. The price of the property that you're purchasing is just one of the things that the seller is looking at. And even though the seller does care about the price, all of the other terms need to make sense. So with respect to down payment, even though 20% could be the standard, you can put down a higher down payment. You can adjust your closing time frame. For some sellers who, like the one that I have right now, this is their first sale in 50 years. And they need a little bit of extra time to leave the property after closing. So really finding out exactly what the seller's motivations are or what they need in order to complete their transaction. There are really easy ways for a buyer and their agent to structure the terms of the offer such that it speaks more favorably to the seller. One of the really important pieces of advice that I will give buyers today is If you see a property that you are interested in, it is okay to put in an offer and have a contingency of viewing it, right? It's really important for you to get your foot in the door and have a seat at the table as quickly as possible, especially when you're up against cash buyers. So nothing is set in stone until a contract is signed. So I always encourage buyers, if you see a property that you like, we're going to submit the offer and we're going to make it contingent on you seeing it. So that's one of the best pieces of advice I have, especially in this market where there's a lot of competition and there's like low inventory.
Gotcha. That's good to know.
I would love to add one item to that. I think Lisa's
Sure.
absolutely right. And I think it really comes down to the strength of your broker, someone like Lisa being there to negotiate a better deal and also highlight their clients, the higher points of their offer. There is only one off the top of my head benefit that exists only for buyers with mortgages. It's something that the UNFCU actually offers to their clients, and it's something that we look out for on any purchase, something called the purchase SEMA, which is, I don't want to go too deep into the mechanics of this. However, if a buyer is buying with a mortgage and the seller does have a mortgage left on their property, we are able to create a savings for that buyer in the form of mortgage tax. So mortgage tax is about 2% overall of the mortgage amount. That's rough, by the way. It's actually between 1.8 and 1.925%. However, we're able to save all of the mortgage tax on that. And in some instances, I'm sure Lisa will back this up, we'll split those savings with the seller. So the seller, in essence, is able to get more money in their pocket due to a buyer with a mortgage. And thanks to the UNFCU, who's able to accommodate this, usually without losing any time, in a way that makes you a better buyer to some sellers.
Gotcha. Thank
Absolutely.
you. Good. Okay. So it's great to hear that there are these options. Going back to first-time homebuyer programs and those types of down payment assistance, can non-US citizens, for example, G4 visa holders, access US first-time homebuyer programs and or down payment assistance?
Yes. The only restriction that we would have is that to qualify for those minimal down payment loans, a member would need to have a U.S. credit profile, an acceptable U.S. credit profile. Because mortgage insurance, we talked about that a minute ago, PMI is required on those loans. And while UNFCU is very adept at working with members with little or no credit, the PMI companies are third-party vendors. These are independent insurance companies. They have their rules and their guidelines. And typically that does not include insuring loans for someone with no credit profile. So for someone who is in the US on a G4 or whatever type of visa and has established a credit profile and is a first-time home buyer, absolutely, you're eligible for those programs. Not necessarily for someone with no credit or limited US credit. That person would most likely need to count on making a 20% down payment.
Gotcha. Thank you, Chip. And um, Chris, maybe this one is down your alley, but what if these folks are not actually living in the US? Can they purchase a home in the US?
Yes, they can still purchase a home within the US. We're able to do so. I mean, it's a mixture of technology. It's a mixture of obviously having the right broker. I think you heard from Lisa before, specifically, it's about being able to view the property in some way or another and having somebody with access to that technology. Your bank and your lawyer can do this. Now, purchasing a home that you're not living in within the United States, it can get tricky when you're dealing with a condo or a co-op when they have restrictions in place on that type of ownership. So you really want to get that information to your broker first and foremost before you move forward, so that they can pick a property that works well for them.
Gotcha. Going back to that full transparency, just want to put your story right out there so that you make the best decisions and guide you the best that we can. With that said, we are coming up on time here, so I do want to ask all of you, we could start with Chris, if you can share, one piece of advice, one key takeaway you want the folks to leave today's session with, what would that be from your perspective?
I usually, whenever I'm speaking, I repeat this often. I haven't gotten a chance to today, but the earlier we have information, the stronger of a position we're in. So if you have a property you like, tell your broker, tell your bank, tell your attorney immediately. We can start looking into it and finding out anything that we need to know, even before you make your offer. That could either make your offer stronger or make you more confident in the offer that you're making.
Excellent, thank you. Lisa, how about you from a real estate perspective?
My piece of advice for this year has been buy the home you can afford today, not the one you hope you can afford tomorrow, right? I think a really smart purchase today, even if it's a starter home, it's going to help you build equity and experience. And I've seen buyers do some really amazing things with, creating portfolios with a starter home. I think that's the advice. Buy the home you can afford today, not the one you hope you can afford tomorrow.
Excellent. Chip, do you want to bring it on home? What advice do you have for us?
Absolutely. And again, thank you to all of our attendees and to Lisa and Chris and Catherine for all their time today. My number one takeaway or advice, excuse me, would be for a member to make an appointment with a mortgage representative. And let's be honest, buying a home for anyone is rather complicated and verging on complex. It's even more so for someone first-time home buyer, perhaps in a country that's not where you're from, perhaps in a different language than your native tongue. All of those are just complications. But our whole point of being here is to make this as smooth a process as possible. And we have years and years and years of experience at doing just that. So rather than worrying or wondering or guessing, take some time and schedule an appointment with a mortgage representative, and you'll be shocked at how much information you're going to walk away with after 1 hour.
Yes, and we have most certainly are going to be walking away with lots of information from today's session. So a huge thank you to all of you, Chip, Lisa, Chris, and Catherine, who joined us earlier, for sharing all of this information with us and being open to our list of questions. We do have lots of questions that are still remaining. So if you're for those of you that are attendees out there, if your question was not answered on the air, we will certainly have one of those mortgage reps that Chip talked about reach out to you directly. But with that said, this brings our webinar to an end. And thank you again all for attending. If you would like to rewatch today's session, you can access the recording on our website in the coming days. We also invite you to visit us at our website and our mortgage page to learn more. Our mortgage reps are always ready to assist with questions, and you can find their contact information again on our website page or by scanning the QR code on your screens as of right now. Thank you all again for attending and enjoy the remainder of your day.